Ooh, we got something new. First time I've ever done this. You guys have to let me know what you think in the comment section down below. But welcome to freaking Naked Ape review, baby. Today's naked shorts are going to be the taco shorts, coming in fresh from your boy Trey from Trey's Trades. How we doing? I'd like to preface by saying, obviously, that I'm not a financial advisor, not financial advice, but today we're going to be looking at something that Melissa Lee had put out. So Melissa Lee was the first kind of person on CNBC that released any sort of notion about naked shorts. The infamous clip, she came out and said, naked shorts, yeah, which got this huge spark of excitement and frenzy over Twitter and throughout the ape community that are watching AMC stock. And there's a really interesting piece that she talked about here on CNBC that I think is kind of worth highlighting and reviewing. There's going to be some pieces in here that maybe I agree with, maybe I don't, but I'm just going to give you my thought process on this entire thing. It's going to be a lengthier video. This is a 10-minute interview. I'll try and keep it as short as we can, but like I said, you guys let me know in the chat bar or the comment section down below what you think of this whole thing. So without further ado, let's get into the video.
Fears of a regulatory crackdown sending Reddit stocks down big today. Last night, GameStop disclosing that the SEC is looking into the recent volatility in its shares. That after SEC Chair Gary Gensler announced plans to review the current market structure specifically.
So if you're not aware who Gary Gensler is, he is a new chair of the SEC that is looking into the entire market, essentially looking for different manipulation, volatility, possibly naked shorting, any sort of malpractice, corruption, or financial treason that could be taking place so he can crack down on it and make this a more free market for everybody else in the the retail investors out there in the market space.
Specifically payment for order flow. And on Monday, the SEC announced it is looking into any disruptions of the market, manipulative trading, or other misconduct when it comes to some recent high-flying names. So as the SEC turns up the heat, what exactly will they be looking for? Let's bring in Lisa Braganza, former SEC branch chief. Lisa, great to have you with us. Thanks for joining us.
Thank you so much. It's great to be here.
I think that there's a big question amongst some of these, retail traders who are in these high-flying stocks as to what is going on in the markets and whether or not their concern is real or not. It is pervasive. So let's go through the numbers here. These are Gary Gensler's numbers. 53% of total trading happens on public exchanges, which means that 47% does not. 9% happens in the dark pools. Does the SEC know what actually happens in these dark pools?
So what's she talking about, right? So Melissa Lee, as I'd mentioned, she's the co-host here on the left. She essentially slipped up on CNBC one day and brought up naked short selling, right? Essentially the thought process behind people who short a stock with stock that does not presently exist. So hypothetically speaking, if there's 100 million shares that exist floating on the market and you decide to short 110 million, those extra 10 million would be naked shorts. They don't exist. This is an illegal practice ever since the financial crisis, way back when. And this is something that's, trying to get cracked down on, what the SEC is looking into. And what she's talking about right here is this idea of public trading. And she actually goes on, the co-host, or the guest here, I should speak, on what's actually going on with these off-exchange transactions that are taking place. So 53% being total trading exchanges, that refers to, the New York Stock Exchange, the NASDAQ, right? Just normal everyday exchanges that the market was built to handle. So we'll just continue on through this video. I want to give you a little bit of an update in case you don't know what this all means.
The SEC has the ability to be able to look into that. The problem is that, for this large portion of trading that isn't occurring on the public markets, it's gumming up the works. The way that the markets were set up was with an expectation, and the regulations are set up, was with an expectation that there would be public trading and that the prices that stocks were trading at would be available on those public platforms, exchanges. Well, that's not the case for about half the trading that's going on out there. And the great thing about Chairman Gensler, I really want a Chairman Gensler bobblehead because he's just the best. I mean, he is looking at this, at the reality of what trading is today and saying the law is out of step. And, that's the sign of somebody who's not a lawyer. And so, it's just terrific to see.
We have the ability to look into what is going on, and we should also add as a corollary that 38% of trading happens in off-exchange trading platforms, and so away from the public exchanges as well. Could you say definitively that things like naked shorting does not go on, given that the SEC hasn't really looked into the trading activity to date in these dark pools and the off-exchange trading, which is subject to a whole different set of rules? I mean, do we know? Because the perception of this new generation of investor is that the market's rigged and that there are institutions and bigger investors who are committing effectively financial treason off exchange.
So this is the idea of the entire AMC stock movement, right? So the data that you just gave, right? 53% of transactions take place on the regular everyday exchange that is built for the market, right? And what doesn't take place is 9% in dark pools and the other 38% in these off-exchange platforms. Now, the problem with this is the transparency, right? This gives the opportunity for any big institutions. And by the way, retail investors can't really do this stuff. So does that sound like a free market right off the bat, right? Not really. Is this an issue? I think so, right? And it's a beautiful thing for her to be speaking on. Anyways, AMC stock is built around this same thesis and hypothesis of, hey, look, this market isn't really built fair. This gives an opportunity for these big institutions and firms to not be transparent about their holdings, to leave retail investors in a place where they have to speculate, hey, what's going on with the stock right now? Is this actually people selling? Is this short selling? Is this naked short selling? Is this failure to delivers? Why are we not running up? Why are we running down? Why is it running up, right? There's a lot of things that we don't know because of this transparency that's taking place, right? It's a fascinating place to be sitting right now, where 6 months ago, these weren't conversations that were even being had on national television, let alone CNBC. So that's kind of the fuckery that's taking place that doesn't make sense in terms of almost half of all transactions not taking place on public exchanges.
And that is the huge issue that I think the current chairman is addressing, that the trading in meme stocks, the fact that that we have Reddit traders, people who are very active and who want to be investing, young people who are learning a lot and are passionate about this, but who lack confidence in the regulatory structure and in the system. That is something that, you need confidence in capital markets in order to have a healthy system for raising
confidence in capital markets. I had to stop right there. I had to, because that is so key. It's key because confidence in the markets, right? Think about this in terms of a stock setup, right? So if a stock, you're not confident that it's going to continue its run up, you're worried that the rug might get pulled, you're not going to put your money in there. Worse off, you might take your money out of there, right? So to have a lack of confidence in the stock market because of manipulation, fraudulence, corruption, naked short selling, failure to deliver, lack of transparency, whatever it may be, right? That's a key point. That's what this entire message is behind the freaking crazy short squeeze that's taking place with AMC and GameStop. Primarily my focus, AMC right now, right? Beautiful, beautiful point. I like that she actually doubled down on that.
Raising money for business. So this situation is something that I think he wants to address. My hope is that he's not just looking to, or the enforcement division is not just looking to come down on the Reddit traders. I mean, obviously, if there's insider trading that was going on, if there's, market manipulation that's illegal, then, they will find that. I think it's a shame that GameStop's stock took a hit when it disclosed this subpoena, because, this happens all the time. The SEC can be doing an insider trading investigation, and it will issue a subpoena to the company that whose stock was traded, and the company didn't do anything wrong. So there really isn't any reason for the markets to be reacting so negatively, and for investors to be running from GameStop.
Right.
This is not a GameStop problem; it's a trading problem. With respect to the naked shorting, I don't think the problem really is naked shorting.
I'm going to stop it here and we'll continue with the naked shorting. But the subpoena, right? So GameStop took a pretty nasty hit. I remember last week it was down like 25% in a single trading day. And everybody was super confused. They were like, what the heck is going on? As she just mentioned to right here, with that subpoena coming out, it's not a GameStop issue. It's a transaction issue. It's a trading issue. It's whoever is holding transactions through GameStop, whether it be, the retail investors, which we obviously know are not really causing the problem here, the institutions, insiders, the market makers, whoever's making all this sort of stuff click and happen, right? So why did the market react so negatively? Why did GameStop take a nosedive with the subpoena? I'll tell you why. Lack of transparency. A lot of these transactions get filled on dark pool and off exchange off trading exchanges, right? Almost 50%, 9% on these dark pools, and 38% on these exchange trading platforms. That can lead to situations like this because they're not transparent. You don't know if people are selling. You don't know if the market's reacting poorly. It's simple as this, right? Collusion and manipulation, my friends. I'm telling you, there are a lot of people out there who knew ahead of time that this sort of thing was going to happen, and they were able to react in a way, in fact, go offensive and play it off as if the market is reacting negatively, and then bam, this is all over financial media. GameStop's down, AMC's down, and they paint the exact picture that they want to see. That's the issue that's systemic with this whole problem, right? Now, she's about to get into naked short selling, and I've got a different opinion than she does, but we're going to listen to what she's got to say anyways.
Shorting is a good thing. I mean, we have this balance that goes on. We have people who buy a stock and, they want good things to happen. So they want the price to go up. But sometimes the price is too high. So how do we bring it back down? Shorting is one of the few ways that we can get that price back to reality when it's too high.
Sure. And I don't think anybody.
So short selling in and of itself, not bad, right? I don't partake in short selling. It's not my cup of tea, but that's because of the systemic issue that's built around short selling, right? In a perfect world, you go long on a stock, you buy a stock if you think it's undervalued, you think it's going to go up. In a perfect world, you short a stock that you think is overvalued, that you think is going to come back down, right? This is a big difference. You short a stock because you think they are overvalued. You don't short a stock to make it undervalued. You don't short a stock to make it go bankrupt. That's the malicious intent behind what short selling represents in the stock market now. There's no way that a lot of these small cap companies who have gone bankrupt, right, were not involved in partly due to short selling and naked short selling, which is where I think the systemic issue is. So she's not wrong in the sense of saying, hey, naked, short selling is a good thing, not naked short selling, but short selling is a good thing because true, it keeps balance in the market in a perfect world where human emotions and greed don't come into effect. But that's the problem, is the way that this is systemically built. Short selling isn't feasible. It doesn't make sense to be able to short a stock beyond the capacity that the limitations of the market are supposed to set. It still happens anyways, right? That's the problem with short selling. So she's not wrong. She's right in the sense that shorting is a good thing. I wouldn't partake, but I won't partake until the market's built in a way where it can handle short selling and it's not used to bankrupt companies and take money from people, right? That's the issue that I'm seeing right now.
But he's disputing the role of shorting in this market. It's whether or not naked shorting, which is illegal, has been illegal since the financial crisis, actually exists, and whether we know it exists or doesn't exist when so much is traded off exchange and there's less transparency to the market. But I want to get back to something that you said that I thought was interesting, and that is the SEC looking into these Reddit traders. Why would the SEC go after, in large part, what seems to be retail traders? I mean, if you took a look at what the CEO of AMC sent out yesterday in terms of 4.1 million individual investors that own an average of 120 shares of AMC, this group of people, this cohort, doesn't seem like they would have their wherewithal to manipulate the markets, unless you see something that isn't obvious to me, at least.
Well, I think what the SEC would be looking into is whether there is some kind of coordinated effort to drive up the price. What's interesting here is that what you tend to see in a market manipulation is a pump and dump, and people take their profits. That's not the case here. So that's the main reason that I think the SEC should not be focusing on the traders. Because they're not. Some of them, of course, are getting out and taking some profits, but the vast majority are not, and that is not what
right.
the overall group was advocating and was doing. So I think the real issue here is, do we have systemic problems, not retail trading problems, not
right.
manipulation, and some of it is going on undisclosed.
Yep.
The SEC has the right to go in and look at what Citadel is doing and look at what these other big market participants are doing. But how much are they doing it? That's something we just don't know.
Right.
So there's a couple things in here that I found interesting. The one of them was a pump and dump scheme, right? Is there retail trading that's taking place, ape trading taking place, that essentially could be considered collusion and manipulation of the stock market, right? And my simple answer to you with AMC and GameStop specifically is a no, right? And this is my reasoning why, is because all that I have seen in my last 6 months is not people telling you to buy and to sell at certain points. That's manipulation, right? You cannot do that. It's sharing due diligence, research, numbers, options chains, education. It's all good things that are actually improving and sharpening the blades of the retail investor and the apes out there so they can make better financial responsible decisions. Second thing was, a pump and dump. So what is a pump and dump really? So a pump and dump is this idea of a stock runs up and a stock immediately dumps back down, right? It kills a lot of people. Some people get stuck. So you have maybe the first person out here who coordinated this pump and dump. They say, hey, we should buy this stock, buy this stock, buy this stock. It's going to go up. It's going to go up. They state facts, and then it runs up, and then it just dumps back down. And these people who start these pump and dumps make their money and then get out of the stock before it actually happens. You want to see what a pump and dump looks like? If you're able to make money on them, that's awesome. That's the whole point of the stock market, is to make money. But that's a pump and dump, right? Clove. Did you hear anything about Clove before it ran up? I didn't hear, and I tell you what, I'm on the internet for 5-6 hours a day on top of my day job, right? I'm on the internet 5 or 6 hours a day, and I hadn't heard one word about Clove until the financial media was talking about it, and it ran up 70-80% on that single one day, right? I hadn't heard a lick of anything. This is a pump and dump, right? It's the exact look of a pump and dump. It forms this peak formation, right? It runs up, it peaks, it runs back down. That's a pump and dump, right? Do you see that with AMC? No. You really don't. This is strength. This is not a pump and dump. This is people that actually want to trade AMC stock and make money on AMC stock and are holding throughout. That's not a pump and dump. This is not collusion, in my opinion, right? And that's a beautiful point that she made. This is not a retail investor problem. This is a systemic and institutional investor problem. It's the 99% versus the 1%. The 1% trying to maintain their wealth and take more money from the 99. And I'm very glad that she's mentioning that. In fact, it makes me sad that the SEC would even consider investigating retail investors, because they're not the problem, right? The problem is, the system is built for the 1%, and now that the 99%, the little guy, is starting to speak out about it, they're trying to kick him back down. They don't want him to realize what's going on, right? That's the problem. It's not the little guy. And if they make you feel like it's the little guy, it's bullshit. It's not. The problem's not the little guy, not in the least bit. So we'll continue on.
Lisa, thank you so much for your insights. We do appreciate it.
Thank you.
Berganza, former SEC branch head. I think that is the interesting question. That is, are there systemic issues involved here that the SEC needs to look at least, because there is a lot that we don't know. And for all the people who are ready to say that naked shorts don't happen, that's definitely, one opinion. There's another group of people who believe that it does happen, and there's so much off exchange. Do we know?
Right.
That's the issue. And
it's nothing that we're going to say that's going to change their opinions, and that's fine. And I'm sure it does happen to a certain extent. I've been of the belief that these derivative products that are creating synthetic shorts that are highly levered are part of the problem. I'll also say this. Don't think for a second, and I've mentioned this, I'll say it again, that hedge funds haven't hired people to infiltrate and watch and in some capacity participate in some of these rooms. Without question, you want to investigate something, go find those guys and gals, because I think they might be at the root of this problem as well.
It's funny. It's funny because I actually mentioned this exact same, hypothesis that was just mentioned now of infiltration on Fox Business last week. It's good to hear him say that. And I do think that happens 100%. So bots, shills, pretend apes, right? The people who try and seep into the community to spread FUD, fear, uncertainty, and doubt out of scaring you out of your position based on a financially responsible decision that's not your own, right? That 100% happens. And that's my greatest concern towards this entire movement of AMC, the legacy and the storybook being written, is that people will try and sway you of your opinions to disprove fact through speculation, right? These are the sort of things that you got to watch out for. And that is market manipulation to a T. People paid to do that. That is financial treason. It's treason. And I've seen it with my own freaking eyes. I've seen the same bots posting the same shit over and over and over on YouTube videos, on my Twitter comments, and they're all faceless names on Twitter, faceless names on YouTube, or their names like freaking Bone Ham or something ridiculous that makes no sense in the least bit. But this sort of stuff happens, right? And to say that it's a retail problem makes no sense, and it's it's good, honestly, to see. To be honest with you, a lot of times when I watch CNBC, it seems like a lot of this junk of this is fed for the suits. It's meant to say that you're dumb money, you don't know what you're doing. But Melissa Lee is leading actually a really solid sort of podcast and conversation here regarding the truth behind naked short selling and some of the problems within the derivatives market and the like, right?
What's your perspective from the options market point of view?
Yeah, I'll tell you what, the volumes are absolutely extraordinary, Mel, and we've talked about that before when we were addressing AMC not too terribly.
AMC, when I had my interview with Adam Aaron, had 11% of the overall options volume out of the entire market. That's a phenomenal, stupid number.
Terribly long ago, and going back to GameStop back in January, and the volumes continue to be there. And you know, the derivatives markets, they're a great tool, but they also, you know, there are obviously some of the characteristics of it all that cause it to seem like it's a different way of trading, which it is. And if you know what you're doing, then I think that's very comfortable. For me, my biggest discomfort is that I don't know that a lot of the people that are actually trading in the derivatives markets right now completely understand what their risks are. And I don't know how we can fix that, but they've got to get a better understanding of what's really going on and how much risk do they really have on. And I think that's part of the problem, because she mentioned investments. These are not investments. These are trades. These are traders. There is absolutely no doubt in my mind about that. Even the 100 share folks or the option folks, they are trading this. And so they're not looking at this as some sort of they're not seeing the fundamental story. They're not seeing a lot of the other aspects of it. What they're looking at is the opportunity for that squeeze of those shorts. And I'm not saying there's anything wrong with that, but they've got to understand much more about what they're doing and what their risks are. And that's my biggest concern right now as I watch this continually move to different stocks each and every day.
There's a couple things there I don't know about. So he talks about a couple different concepts there, right? He's talking about options, which are derivatives. They're one and the same. Options are a form of derivatives, right? He talks about fundamentals and essentially the fact that people are ignoring fundamentals. They're only in this for the short squeeze, right? Also, you know, I think that's pretty factual. We're obviously not here for fundamental reasons. We're here for the squeeze, right? As of right now, the long-term thesis will be here eventually, but not quite yet. But the things that I don't know about is this, right? He was stating that people are playing options that don't know anything about options, right? And I think the better, case to be made is true. While there are people who might be playing options that don't know about options, obviously that's not something you should invest in. You should trade if you don't understand options. He's failing to mention the absolute monstrous liquidity and gains that have been made through the options market, right? That's what's impressive. There's always two sides to the same coin, right? You can look at the 1%, 5%, 10% negative, right? The 1, 5, 10% who maybe are playing options who lost money because they don't understand what's happening. Or you can look at the 90, 95, 99% who do understand options and who are trading them responsibly, limiting their risk and exposure so that they can make life-changing money. I know in the last 2 weeks, there have been people who have made $1 million+. I've gotten messages from over 100 people who have made $1 million+ on options in the last 2 weeks, right? That's the sort of stuff that's incredible. In every sort of situation, in every trading environment, you're going to have people who don't make money, who make trades because they don't understand and they lose money. That's inevitable. And I 100% agree that we need to educate people through that process, right? But that's not the majority. We can't focus on the minority here instead of the majority, right? The majority is this, right? And that's the whole interview. I'll give you my final thoughts on everything. The majority is this. People are making money on AMC stock. We're not talking about multiple stocks. It's not a new stock every day like this guy's saying, right? It's not Clove, BlackBerry, blah, 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 blah. Those are all sympathy plays or pump and dumps, right? It's AMC and GameStop. That is what people are watching right now. Simple as it is. I'm more bullish on AMC than I am GameStop in this current moment in time. I've been talking about it for 6 months, right? But this idea of people need to be more educated and understand the risks before they invest in this, that's not the message, man. People understand the risk. People understand the exposure. If you've done any sort of research on this, you know the risks associated with AMC stock. That's your own financial responsibility. This is where your financial responsibility comes into play, right? You can have 1 million people do research and due diligence, but at the end of the day, you control your own dollars, right? You have to mitigate your risk and make your own exposure decisions. that's not a feasible excuse to push a different narrative on what's actually happening here. So I'm super happy actually about the way that Melissa Lee has gone about this whole naked shorts slip up on CNBC. I think her, painting this picture and trying to dig into what the SEC should do about it and the systemic issue with the whole problem is a really fascinating piece. And in fact, I think she's one of very few people on CNBC who's been painting this picture in a pretty solid way and trying to spread good information. So I think that was a solid interview. This is something I think I'm going to do on the weekends. I'm going to try and dig into a different interview piece. They're not all going to be this long. Most of them are like 4 or 5 minutes, but I really like this one. I wanted to talk about it. So if you enjoyed this, put it in the comment section down below. Let me know. I think I'm going to do Fox Business tomorrow. I want to look into something that CV Payne, Charles Payne has talked about, and I'll get that out to you when the time comes. So that's what I've got for everybody. If you enjoyed this, if you know the whole spiel, drop a like, consider subscribing. What do you want to do? Catch you on the next one, my friends. Much love and peace.